You know, hidden deep inside the U.S. housing market, there's this ticking clock. It's a high-stakes deadline that keeps coming up again and again, and every time it does, it puts trillions of dollars in property at risk. It's a recurring drama, and the consequences, well, they're very, very real.
And that brings up the big question, right? Why? Why does Congress keep playing this game of chicken, risking a total freeze on the housing market? To figure that out, we've got to look at the one government program at the center of it all.
Okay, here's a date you're going to want to remember. September 30th, 2025. That is the next deadline. On that day, a program that props up a huge piece of the entire real estate market is just set to expire. Unless, of course, Congress steps in to act.
And believe me, this is not a one-time thing. This program has needed 33 short-term extensions just since 2017. 33! That's not stability, that's a pattern of just barely kicking the can down the road at the last possible second.
So what is this program that's always living on the edge? Let's dive in and break down exactly what the National Flood Insurance Program, or NFIP for short, is all about.
At its heart, it's pretty simple. The NFIP is the main place people go to get flood insurance for their homes here in the U.S. Now, you hear more about private flood insurance these days, and it is growing, but the NFIP is still the bedrock for most Americans.
And the sheer size of this thing, it's just staggering. Just think about this. It holds over 4.7 million active policies right now.
And what are those policies covering? Oh, just an incredible $1.28 trillion in property value. That is a massive slice of the entire U.S. housing market, and it's all depending on this one single program.
And its reach is truly nationwide. Don't just picture coastal towns. The NFIP is active in over 22,700 different communities, all across the country. It is literally woven into the fabric of our national housing market.
So, we get it. It's big. But what actually happens when that clock runs out and the authorization lapses? Well, this is where you see a really powerful domino effect kick in. When a lapse happens, two really crucial things just stop. First, FEMA, which runs the program, loses the power to issue any new insurance policies. Now, if you already have a policy, you're fine, but no new ones can be written. Second, its ability to borrow money from the Treasury to pay claims after a disaster gets slashed.
And that cut to its borrowing power is absolutely dramatic. Normally, the NFIP can borrow over $30 billion to make sure claims get paid. But during a lapse, that number plummets to just $1 billion. Just try to imagine a major hurricane hitting during that kind of window.
Okay, so this might all sound like some kind of distant, bureaucratic budget problem, but it has a very direct, very personal impact. Let's walk through how this lapse turns into a complete nightmare for a homebuyer.
It all comes down to a federal rule called the Mandatory Purchase Requirement. Basically, it means that if you're getting a mortgage for a house in an area with a high risk of flooding, your lender is required by law to make sure you have flood insurance. It's really simple. No insurance, no mortgage. End of story.
And this is exactly where those dominoes start to topple. So a buyer finds their dream home, but it's in a flood zone. The lender says, okay, great, but you need flood insurance. The buyer goes to get a policy, but the NFIP has lapsed. They can't issue a new one. The result? The lender legally cannot approve the mortgage, and the sale just grinds to a halt. The whole thing is frozen.
Now, this isn't just a hypothetical. It's like we're watching a rerun of a movie we've already seen multiple times. The history of the NFIP is just one long story of brinkmanship. And that exists because there are really deep disagreements on how the program should be reformed. Debates over how much homeowners should pay versus how much debt the program should carry. And since they can't agree on a long-term fix, Congress just kicks the can down the road with yet another short-term extension.
I mean, look at this. We've had several lapses just in the past decade or so. Some were short, just a couple of days, maybe even 13 hours. But back in June of 2010, the program was shut down for an entire month. For 31 days, you could not get a new flood insurance policy anywhere in the country.
So what was the real-world impact of that 2010 shutdown? Well, the Congressional Research Service estimates that more than 1,400 home sales were delayed or just flat-out canceled every single day the program was shut down.
Let's put that in perspective for a second. Over that one-month lapse, that means more than 40,000 families and individuals had their plans to buy a home thrown into complete chaos. That is a massive, direct hit to the real estate market, and it all stemmed from that lapse in authorization.
So, after seeing the program, the consequences, the history, what's the real takeaway here?
Why does this matter so much?
It really boils down to this. The National Flood Insurance Program isn't just some small government agency. It's a fundamental pillar of the housing market. But its stability is completely dependent on this constant cycle of last-minute fixes from Congress. When those fixes are late, thousands of home sales can freeze. Every single day. And that next potential freeze, it's already on the calendar.
Which leaves us all with one final question to think about. For a program this important, one that protects trillions in property and thousands of communities, is a constant cycle of crisis and last-minute extensions really the best way to manage our national flood risk?